Present.
and Julian Joyce. So we have three. We have a quorum.
Okay. I'd like to welcome everybody. First item on the agenda is public comment. Okay. Second item.
He said public comment.
Public
That's it.
comment. No, she's not public. Okay. Second item, approval of the minutes from the April 10th, 2025 quarterly meeting. Do I get a motion to approve?
Motion to approve.
Second. Okay, all in favor? Motion passes. Okay, on to new business. So FRS mortality table memo.
Okay, so that is in the tablet there. It should be right after that, page 5 of 23. Basically, I guess this is normally something the actuary would discuss, but we don't have them here. So basically, I guess the state did a study. Pedro can add to this as well. And in doing that, there's going to be, FRS has agreed to kind of adjust their calculations. And in doing so, that's going to affect all of our plans that are all going to have to come into line with that in the following year. Pedro, I'll let you go ahead and kind of clean that up a little bit for me. Pedro, can you hear us?
Yes, I'm sorry. I was taking myself off of mute. Hi, good afternoon, everyone. As you guys have a letter as part of your agenda materials from, excuse me, from your actuary, really just advising you of the updated mortality tables and the requirement that local law plans must use one of the two most recent mortality tables incorporated or utilized by FRS. And so, last year was essentially the last time. And so for this next valuation, for the 10-1-25 valuation, we're going to need to update our mortality tables to comply with that, with the statute. So they're, as you can read, the mortality tables have increased slightly, meaning, folks are living longer, which is generally a good thing, but in the actuarial world, it's a bad thing, I guess. In the sense that it will increase the cost naturally to the plan. And so you have as they're essentially they're recommending that you add this, you direct your actuary to quantify what the change will be, what the impact would be to your plan, and so if you would like to do that, then obviously you could make that request, or you could just, let it happen and whatever it is. Since we do this every year, I guess it's really a question of whether or not you want the advance notice of what the change is going to be, or whether you're comfortable just, with the waiting for the valuation to be provided. I think they'll generally. They generally will come out at the February meeting? Is that right, Troy? Usually,
I would think so. Probably with the Val. That's what I'm thinking. They're probably going to come out in February, March, at that time. So unless the city needs it earlier.
It's really up to you guys.
Was the table in here?
No. There is it hasn't been calculated yet. So this is just letting you know that this is a change that's going to happen in the future. If you want an earlier, like sometime the towns will ask for an earlier a calculation now instead of waiting until February for their own, port, or sometime the board could want it. But for the most part, most boards aren't asking for it, but some are, and some cities they've had their front office has said, I think it's going to help us for our planning, so they'd kind of like it earlier. But as far as the board goes, Pedro is right. As far as you guys, I don't know that there's any need for it, but unless you thought there was some reason to have it early.
Troy, do you know what the cost would be?
It's $1,600. So I've done it at 3 or 4 of my plans have said they'd like to have it early. So $1,600, and I sent it over to the actuary, and I think that I don't know if they gave me a time frame. I don't think they did, but it's not like in a couple of weeks. It would be in a couple of months. So, but it's different than getting it in February or March.
Well, I would like to see the table before.
Yeah, it's not calculated yet, so that's why we couldn't provide it for now.
Yeah.
So we want to get it earlier, or are you fine with getting it in February whenever they release it? This is the question, because
Well,
we're
I'm not-
talking,
I think when they release it, because
Yeah, I'm not voting on something that I can't see.
Well, the calculation
We
is
have to
what
get-
he's doing. That's what you would be paying for. So he's either gonna do it as part of your plan later, or he's gonna do it early now as a separate line item, like a different task.
right, you want to see it early, you got to pay extra. You got to pay extra to look behind the curtain.
Right. And like I said, most plans aren't, but I've had three.
$1,600 just to see it.
No, he's actually
Yeah,
doing
early.
it.
See it
So
early.
we're gonna see it in February whenever. the
Right,
state
he's
comes
doing
out.
the full
It's a
calculation.
required change, so whatever the impact is, it's going to be anyway. You're gonna have to adopt it, so, it's really up to you.
Can the cities request that separately? Or are they able to request it separately, or does it have to come from the board?
I haven't seen
The,
any.
the city can request it separately.
Okay.
Okay, so then that's,
So maybe that's the thought. Maybe you ask the city whether or not it wants to know ahead of time for budgeting purposes, or whether it's comfortable just waiting, until the valuation is prepared and finding out, that way. I mean, I don't know how it's done typically. I think typically the city has a general idea as to what the contribution is going to be anyway before the valuation comes out. So this may be something similar, or I don't know. I mean, that's just a suggestion. It's really up to you guys.
Okay. Well, there's no
I
reason-
say this hold off,
I
is
see, that, yeah, is that,
my personal opinion.
What's that?
Just to hold off.
yeah, that's mine too. Yeah, we'll just wait till it comes out and pay it all one time anyway. Okay, so, that sounds good, yeah. Another actuary, great. Okay, next item, proposed 25-26 budget.
okay, that's gonna be on page 6 of 23 on your tablet. So we do this every year. If you look at the far right column, that's our proposed budget for this year. We basically take a historical look at the past year, and we look at what potential items are coming up. Say you have an experience study, or you have some other thing that we know is coming up, or some fee increase that we know is coming up. So we try to look into all the numbers. Basically, we're not trying to get to that bottom number. The number to the second to the right, the actual expenses as of May 31st, 2025, that's where we're at as of today. Our fiscal year ends 9/30. So that gives you an idea of, there could be, still from May that haven't been paid, but from June, anything from June 1st on is not included, or any late invoices are not included. So this just kind of gives you what last year's, estimate was, what our actual expenses are as of now, and an increase in some of things and some things staying the same, based on what I see coming up in the future. And like I said, we try to do a good, estimate, but then we also build in a cushion for each line item. As long as the bottom line, that number at the very bottom on the right side, as long as we don't go over the proposed budget, the state doesn't get involved, they don't come and ask for a special meeting. And so we do try to put in a cushion to make sure that if we have an anomaly, let's see. So IME fees, I just increased that double this year. An IME used to be about $4,000 to $5,000. They're not even close to that, for the most part anymore. So I just went ahead and increased that. If we have one, we're still good, probably. If we have two, we're gonna have to pull from another line item, and that's just kind of how it works. You just try to put a reasonable number with a cushion, but we can pull from any line item as long as we don't go over the total.
Okay.
So I'll take any questions if you have any about that. Otherwise, I'd look for a motion to approve the proposed 2025-2026 budget.
I will make a motion to approve the 2025, sorry.
I'm sorry.
Pedro.
Go ahead, Pedro.
I'm sorry, Troy, I was just looking at the attorney of actual expenses as of May 31st.
Yeah.
That doesn't seem right to me.
I know, and I did send a message back, and I didn't hear back on that. So I am not sure where there's an invoice if it's missing, or if there's something.
I mean, I see in the agenda packet, I have two here from, I think, April and May. That were paid, I think, presumably. So those are not reflected in that number.
Okay,
If you get, if you just go to the next page, right, there's an
yes.
invoice for 1,900 and from May, and I'm sorry, March, and there's an invoice from April for 2,200.
okay, I see them.
You probably, I don't know if you've gotten May yet, but that 530 doesn't seem, that's not correct.
No, and that's why I didn't adjust your number, because obviously if I was taking that as a real number, then I probably would have lowered, the budget amount. But that, like I said, is still, try to be exact as we can, but there's gonna be some invoices that didn't get through that should have been paid by then. So I'm sure he's gonna have a few more that are gonna be, tacked onto that, and that number's gonna go up, substantially. It's not gonna hit the 25,000.
Yeah, we're still way below the.
Yeah, you're still way below, like, that's why I didn't touch it from last year's.
Even the custodian of funds, I mean,
So that is a mixed now, that's mixed with custodian funds and the investment consultant. So those got mixed together, which is why the numbers are kind of different looking. So there is a note that we put into, the actuary did put in in my spreadsheet that does show that because of this, this is kind of an anomaly year. It'll smooth itself out next year and things will start to get clearer. But they did have to move them in there for some actuarial reason. So they are combined in yours.
Still on.
But the amount didn't change. So the amount, you can see nothing changed from last year to this year as far as the budgeted amount. And then the next year, we would probably start to lower that significantly. Once we get that ironed out, there was some actuarial issue. So that'll probably get ironed out for next year's budget.
because, that's gonna be well above 175,000 if it's as of 5/31.
It only goes in
Well, it
September.
goes to September. So, 4 months, and 2/3 of the way through, so hopefully it doesn't go up there.
So you still have 4 months left.
Yeah,
Yeah,
Right.
so you're 2/3, last quarter.
we'll be good.
Yeah.
All right, so do I have a motion to approve the proposed 2025-2026 budget?
Motion.
Yeah, go ahead.
All right, second?
Second.
All right, motion passes. And then proposed 2026 meeting dates?
So in front of you on the tablet, I had meeting dates that I'd put on there. I was asked to try and move these meeting dates to back a week because of the fact that it's so difficult for the consultants to get these numbers anywhere close, to being correct, other than just a preliminary. So I did send that, Scott. You did. We are good on that, right? For you.
Yeah, let me just double check.
Tim sent me back that he already
Yeah, if
changed
Tim,
this.
if Tim did it, then we're
Yep.
good.
So basically, all we did is move it back 1 week. So I was trying to, like I said, because the quarter just ended, it's nearly impossible for them, to get anywhere close to correct numbers. So we're just doing preliminaries, not really giving you what you need to make good decisions financially. I think they would rather present you with a better picture than we have. So if somebody has an objection to it, but it's just very early to be, 10 days in from a quarter ending and try to get them to get their numbers. So
I gotcha.
police approved it. Doesn't mean you have to. We can still go back and forth. And at this point, Pedro's office hasn't approved it yet. But other than that, it's been accepted through,
I don't see a difference in the dates at all. Yeah, anybody have a
So, yeah,
problem with the
the
dates?
ones in front of you, those are the ones that you'd be approving. It's literally just 1 week back.
Oh, okay. Do I have a motion to oppose, I'm sorry?
Which ones are there? Which date? I'm not seeing dates.
They're right here.
Oh,
This page right here.
under my pen. Thank you. Yeah, that's one.
So, all right, so I have a motion to approve the proposed 2026 meeting dates.
Motion to approve the 2026 meeting dates as
Proposed.
Post.
Second.
Okay.
All right, motion carries. Okay, and last is a renewal of fiduciary liability policy.
So that policy is not ready yet, but here's what we do in the case that it's not ready yet, that they just did not have it ready for us, is that I get you to do a conditional approval of up to a $500 or $700 increase, no more than that. Anything more than that, we'll bring it back to the board. The problem is it's going to expire in a month. So we sent them out plenty ahead of time. They're just late getting it back to us. So I made sure that she sent me the email where she sent, they're just slow getting back. So that's what we would do, is get a conditional approval to re-up the fiduciary liability policy up to whatever you guys feel, $500, $700. They don't go up, if at all. They go up, dollars, $50, $80.
Okay.
So $500 is probably fine. So if we get a motion to approve binding the fiduciary liability policy up to a $500 increase, that would be the motion.
A motion to increase the fiduciary liability policy temporarily up to $500.
Second.
First.
All right,
First approve.
motion passes.
Thank you.
Okay, thank you, Troy. That's it. There we are. All right, next up, Scott, you're up, sir.
All right. So it was a good quarter. It's a sight different than last quarter. You know, at last quarter, we were ready to slit our wrist and the world's coming to an end, and it's just funny how that works. So, you know, what we've talked about the last 3 or 4 meetings is how the market has capitulated back and forth. We went from an up market to a down market, to an up market, to a down market, now back to an up market. How it was value, then growth, then value, then growth. How it was U.S., then international, then U.S., then international. And then how it was fixed income versus equities. All of it, all of it. And if you remember back in December when international was doing so poorly, we underweighted international. Well, and I at the time we said, look, you know, you never know what it's going to be. Well, it just so happens this quarter international was better than the S&P 500, right? In spite of that, we still outperformed our benchmarks, right? So we did it was a great quarter on an absolute basis, and it was also a great quarter on a relative basis. If you take a look at the books that I handed out, I just want to show you a couple things. And I'm looking at page 4. For the quarter, the S&P was up 10.9%. Now that's a 20-year average, right? So it got everything in 90 days. But if you take a look at the Russell 1000 growth, those are your large caps, right? So last quarter, it was negative, and it was driven down by those large caps, by the Mag 7. You know, that's what we've talked about, those. Well, those were the things that pulled them out. Up 17.8% for the quarter. Mid cap growth was up 18%, actually more than large cap. And the small cap was up 11.97, right? So everything did well. In the growth space, last quarter, the value did well. This quarter, the growth did well. If you take a look at the 12-month number, it's shaping up, in spite of last quarter, it's shaping up to be a better than average year, right? You take a look at the 3-year, the 5-year, it's just been on a great run. If you take a look at the bottom of that page, the different sectors, last quarter, technology and communication services were the worst performers. Now they're the best. Energy and real estate were some of the best performers last quarter. They're the worst now, right? This is why what I've been saying is, let's get on top of our targets and stay there. We don't really, what typically happens is we have some insight, right? We can say, hey, look, this is what's going on in the industry, this is what's going on in the market, this is what's going on in the economy, and you can kind of glean from that what's going to do well. Well, that's not what's happening since the new president got in. What's driving this market are tweets, right? So we're putting tariffs on. We're taking tariffs off. That has an impact on companies. If you're a large company that has a lot of international exposure, now there's tariffs, that's going to have an impact. That's going to drive prices down because the cost is going to go up. If you're not, then it's vice versa. So it has been, and we still don't know where it's going to land. In Liberation Day, there was a bunch of tariffs, and then they said, hey, we're going to put a moratorium on those tariffs. Now we're back to the tariffs, and now it's going to extend it to August. We just don't know what the answer is on that. So it makes it very, very tough to make those tactical decisions. You take a look at international, everyone would have thought that international did poorly this quarter, but look, it's 11.77. I'm looking at page 5. The S&P was up 10.94. So that's 10% better than S&P. Emerging markets even better than that, up 12.2%. And then if you take a look at fixed income on the next page, page 6, it's about where it should be. If you take a look at that Bloomberg Ag, up 1.21 for the quarter, that puts you at about 5% for the year. That's kind of what you would expect, right? If you take a look at the 12-month number, it's a little better than that. That's because rates came down a little bit. So right now, what we're expecting, let's say Morgan Stanley is expecting, so inflation hasn't happened yet. Everyone thought with the input of these tariffs that prices were going to go up. That's inflationary. What hasn't happened yet, and what our analysts believe is that it's getting ready to happen. What our analysts believe is that everything that was sold this quarter was what was in inventory, right? So the price was already there. But now they're having to replenish the inventory with higher priced stuff. And we're gonna see that in what's gonna be the second half of the year, the third and fourth quarter, our third and fourth quarter as well, and first quarter of next year. So we're gonna start seeing that inflation. What does that mean? That means Morgan Stanley's not expecting interest rates to come down any further. But what Morgan Stanley believes is that they're gonna say, hey, inflation's kind of tipping up a little bit, which is gonna get the Fed to say, hey, we're not gonna cut rates like we thought, right? That's parcel in part why you're seeing Trump on the news saying, Jeremy Powell needs to be fired today, because he's suggesting that hey, we're not gonna cut rates, and Trump wants lower interest rates, right? So, I know I sound like a broken record. This is the third quarter in a row that I think we're gonna have volatility as long as we have these geopolitical forces having impact on our economy and consequently our market. I think we're gonna have a lot of volatility. We've made some changes with managers, which have been really helpful. That's how we got a better than 0.5% return. If you take a look at page 7, we're at 6.91%. Now, keep in mind, our target for the year is 7.6. It's 7.6. We got 6.9 for the quarter. For the 1 year right now, we're at 10.52. Our fiscal year is 545. So at 545, we've got 90 days to make up 1.5%, 2%, right? And if the market stays where it is, we should be right on top of that, which is a lot better than what most people expected this fiscal year, right? So that's good news. If you take a look with your portfolio, we've have a very low risk portfolio. So if you look at the bottom line on page 7, and then I'll get to the executive summary page, but I wanted to point out some things. If you look at that bottom line, you have a little bit lower return. You have a lot lower risk. So up until about 2 quarters, 3 quarters ago, this board was very, very conservative in its allocation and with the managers it selected. If you take a look, the policy benchmark for risk, that standard deviation, is 9.55. To put that in perspective, the market's about 17, the equities market. So you're almost half of the risk of the equities market for the benchmark. And then the portfolio is less than that. And that has everything to do with the managers that we selected. Well, over the last couple of quarters, we've got into some passive investments, which means there's no risk management, right? Which has benefited us. That's all benefited us. It's not bad. It's just, I'm just making sure everybody knows what's going on. So the level of the risk of the portfolio is going up to basically meet what the benchmark is, right? So we've been lower risk. Now we're increasing the risk, which in turn should increase the return of the portfolio. And that's what you've seen. If you take a look at our fiscal year to date and our current quarter, we're higher than the benchmark in return. So by increasing the risk in the portfolio, we did in fact increase return. And so that's good. That's all positive. If we take a look, I'm going to pause right here. Let's take a look at the summary, the executive summary page that we have with all the green and red on it. So if you look all the way to the column on the right, if it's green, that means it's outperforming. And when I say outperforming, that's alpha. That's a risk-adjusted basis, right? And I'll get you into that in a second. The reds, right? So that's your Vanguard. That's your passive investments. When you see the Vanguard U.S. Large Cap Growth, a passive investment is always going to have a little bit lower return. Generally speaking, should always have a little bit lower return than the benchmark, right? Because they have some internal fees. It should be right on top of it, but they're going to be so you're going to have about the same risk, in this case a little bit more risk and a little bit lower return. So that's good. It should always be red. You have that, and if you look at the one where it says BNY iShares, we also did the same thing with international growth. We put it in a passive investment. So those are typically always going to be red, which is fine. That's a very low cost investment. You're not trying to beat a benchmark, you're trying to meet it. So there's no risk management at all. And then the only other one is real estate. And the real estate's the one that we're trying to get out of that we can't because it's illiquid. So everything else, all of your active managers are outperforming their benchmarks, right? Either risk or return or both. And so let me give you an example of that. If you look at Todd International, the manager return is higher than the benchmark, right? So that's green. But then you look, the manager risk is higher than the benchmark. That's yellow, right? So you have, okay, the return's higher, but the risk is higher. Well, you take both of those into account, and you're actually getting more return than the extra risk that you're taking. So that's why you have that positive alpha, that green. So there's 2 points of measurement. There's risk and return. And you could have, one can be better, one could be worse, both could be better, or both could be worse, right? And then you got to figure out, well, is that good or bad? That's what alpha does. So you've got to, and your alpha, every one of these, your alpha is greater than the cost of the manager. And that's what our goal is to have you a manager, an active manager, that net of fees and transaction cost is adding value. And so far, that's what we have right now. So I'm very, very proud of that. That's typically what I go over. If we look, I'll just be really brief. If we go back to the chart, page 10, BlackRock outperformed for the quarter and the fiscal year to date. If you take a look at page 11, that's your Vanguard. Again, that's a passive. It's always going to be, if you look at the chart, it's right on top of it. It's always going to be a little bit lower return. That's going to give you that negative alpha. That's okay. Connors, it has a little bit lower return, but it has a little bit lower risk. That gives you that positive alpha. Anchor for the fiscal year to date has done fine. For the quarter, it kind of stubbed its toe, but over the long term, it's a huge contributor to the portfolio. And I love, this is a great example of what low volatility does. If you look at I'm looking at page 13 now, and that bottom line, your up capture is only 76, which means it only goes up 76% of what the market does. Well, how in the world can you have a higher return if it doesn't go up as much? It's because of that down capture. It doesn't go down as much. That means it doesn't have to come up as much. And then you see the next one is Congress to small mid growth. We just got into that, and it's done a fantastic job since we got into it. Lower volatility, higher return. It's hard to draw it up any better than that. Todd's doing fine. For the quarter, it stubbed its toe a little bit, but 11.5 versus 12. And since we've had it, it has about 2% better return. And then the second one is the one we went back into passive. So it's going to be right on top of that. Your fixed income for the current quarter and the fiscal year to date, higher return for both of them. And then the real estate, it's all zeros, and that's to what Troy was talking about earlier. We just don't have the data yet. It's just too early in the quarter to have the data. And everything else is compliant. There's yeses everywhere. So the only thing that we can consider, let's go to page 9 real quick, and then I'll be done. So what we did last quarter was, if you take where it says Todd International Value and International Growth, we underweighted that, and we put the money in the mid-cap value and mid-cap growth. So you see where those two are a little underweight or left of the line, and the two triangles are a little to the right of the line. We took the money from international and put it in mid-cap. That's a small bet. Our target's 5, they're at 3. So it's a real small bet. That's the only thing that actually hurt us, because international did better than those two, right? So what most plans are doing right now, because of what's going on in the international space, this is why we unloaded, this is why we lower, because of what's going on in the international space with all the tariffs and stuff. They said, look, there's an extra risk there, so we're going to underweight that a little bit. So I'm okay with this. It didn't work out this quarter, but I'm okay with being underweight international. We just don't know what's going to happen in the space. So if we knew who was getting tariffed what, I'd feel a little more comfortable about being a little higher weight, but I think we're fine here.
I agree.
So,
Without knowing what's gonna happen.
yeah, it's
Next
just,
couple months, it's a roller coaster.
it's a roller coaster, right?
So-
You know, I hate the fact that we did it and then the next quarter, but that happens
That's the
every
game.
time. It happens every time you make a
Had you
decision.
not done it, we would be, we'd be.
That's
having a
exactly
different
right. That's
conversation.
exactly right.
That's exactly
So
what it is.
I like where the portfolio is. It's outperforming. I like the managers we have, the active and the passive combination. Everything's working.
Okay, good. Anybody got anything? Matt?
So I'm not making any, I'm not making any recommendations to make any changes at this point.
Randy, you got anything? Well, thank you.
Yeah,
I
I think
agree with you.
we're
I
in a
agree
good
with you on that
posture.
one. Yeah.
Considering everything that's still going on.
Yes.
Still some uncertainty.
A lot of uncertainty, a lot of uncertainty.
Daily,
Yeah,
daily uncertainty. So, thank you.
my pleasure.
Okay. Pedro, you're up, sir.
Yes, sir. Can you guys hear me okay?
Yes.
Yep.
Okay. Hi, good afternoon, everyone. Nothing really significant to report on today. No actionable items. Just a couple of updates, housekeeping. First, let me just start with a legislative update. So as you guys are likely aware, obviously session ended, extended session ended a little about a month ago. And so no changes, not to bury the lead, no changes on the legislative front. There had been two bills that were filed, two that would have affected local law plans, and then there was the bill that was filed. It's been filed a couple times now these past few years, looking to amend the FRS system to incorporate the 3% COLA for certain folks hired or retiring after 7/1/11. So neither of the three really looks like had much traction. They didn't really go anywhere, to be honest. So we'll see how next year looks. But for this year, no changes on the legislative front, which in my opinion, humbly, it's a good thing. So we'll see if the legislature leaves us alone next year. But that's what happened this time. Okay. And then lastly, just wanted to remind you, refresh your memory, the financial disclosure forms, those Form 1s, they were due July 1st. You
Pedro?
definitely.
I checked and they're all good to go.
Oh, good.
Yep,
Okay,
they're
I
all
was just
set.
gonna say, you definitely don't tell me now if you haven't filed it, but luckily that's not the case and everybody's good. So, and that's really it. Nothing further from my report. I don't wanna keep anybody. I know we're gonna be talking. There's some educational opportunities on the agenda for you guys, and so if anybody's interested in those, two good conferences coming up in the fall. I'll be speaking at both, so if you guys are there, I hope to see you there.
Perfect. Thank you.
Thank you all.
Thanks, Pedro.
Okay. So warrant number 36 for ratification.
Yeah, the full consent agenda, so that's all the warrants plus the fund activity report. We do a motion all at one time. If anybody has any questions, and you can see on there, Pedro is going to have over $4,000 that'll show up. It came after May 31st, so once this hits, it'll be $4,000 higher.
Okay.
So he's right.
Okay, so do I have a motion for all the warrants for ratification, all the invoices to be paid?
For the consent
For the whole
agenda,
consent
right? The whole
agenda.
consent
Yep.
agenda.
Yeah.
Yeah, I'll make a motion to approve the consent agenda as presented.
Perfect.
Agenda. there's the words.
Second.
All
All
right.
right, motion passes. All right,
Okay, so my turn.
Your turn, Troy.
So we're just going to do the update on the state annual report. We submitted it and we got approval, so we're going to go on that. In mid-August, we will get back what the number is for the state monies that you're going to receive. The meeting right after that, I think, is October 9th. I'll report to you exactly what that number is going to be. So you'll know at that point what you're getting. Then moving down to the educational opportunities, like Pedro said, FPBTA has their fall trustee school October 5th through the 8th in Ponte Vedra. For FPBTA schools, those are the ones that you send me an email, I forward it to our analyst. The analyst signs you up for the class and then sends you the confirmation that you've been enrolled. That's when you book your own hotel, and then you track your expenses. I think they send you a form to track your expenses.
That's in October.
October. Yep, and then
I
the
might
other
go to
one is right after, it's actually right before that, it's in September, is the Division of Retirement's 54th Annual Conference. That's the one that's free. That's the one that if you want to sign up for it, the brochure is in the packet that I sent you. It's at the very, very end of your tablet there. You sign up on your own, just keep track of probably won't need a hotel because you're right here, but just keep track of your expenses. So you get reimbursed for those. And the same thing with the same person that's going to send you is going to be the analyst. That's the person you send back your expenses to. If you don't have their email, just send them to me and I'll forward them. But yes, so for FPPTA, you got to send me that you want to go. I send that to the analyst. They sign you up. For the state conference, Division of Retirement, you sign yourself up for that. Okay?
Okay,
Sweet.
And that's it for me.
okay.
Awesome.
Anybody on the board have anything? Trustee reports? Discussion? Anything? Okay. Heather, do you guys got anything? No, we're good right now. Okay, looks like we flew through this agenda. Next meeting will be Thursday, October 9th, 2025 at 4 PM.
Yep.
It's now 4:40. Do I have a motion to adjourn?
Motion to adjourn.
Yeah,
Second.
Motion carries. We're adjourned.
Thanks, Pedro. Appreciate it.